What is good, family? Welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do that whole thing that is always necessary to make sure to get that algorithm finessed, right? Let's get some more viewers up in this chat. It's already looking pretty nice right now, you guys. Do me a favor, and throw those A's in the chat if you can hear your boy speak. Let me see those A's in the chat right away. What is up, family? Oh my goodness, what is I see smoke screen up in here? Rocky Mountain Gobblers, Mark Roach, Barbara Young, what's up, Bosco? Ian, my boy, always good to see you, man. Mark Roach, Coin Fox, dude, look at you, man. What am I gonna do without you, my bro? What am I gonna do without you, man? I really appreciate your help, my dude. I can't be more thankful to you, man. We're gonna go ahead and throw in some tunes up in here, right? And we'll get this thing rolling, man. Guys, what can I say? What can I say here about GTII? Did we nail those targets again or what? Did we catch it or what? Wait a second. Hold on. Did we also catch FNGR too or no? Oh man, we nailed them again, my bro. It's looking good, man. It's looking good. I'm very excited to be presenting these types of targets and this type of accuracy to you, team. Trust me when I say that it doesn't happen all the time, right? I'm not a magician here. I don't hold a crystal ball. There's nothing like that here, team. It's only the market cycles. It's just price action. We're following what the charts are saying, and that's it, right? And it's as simple as that. And I get asked the question often, how do you chart fraud? But it's really that I'm not looking for fraud. I'm looking for a chart. So that's really all it is, team. I'm looking to chart a chart. And that's really all it is. I promise you on that, okay? Yeah, it's tough. It's tough. Nothing I do here is plain and simple. I might sound like I'm actually putting it together in a really I don't want to say like a simple manner, right? But that's the entertainer side of me. So don't let that kind of fool you here. What I'm doing to present to you this analysis does take its fair bit of due diligence and attention, right? I need to make sure that I can get, good rest. I need to make sure that I can keep a good diet as well. I'm trying to make sure that I can keep sharp for the team in order for me to deliver the goods, because if I don't, right, then we're gonna suck all together, and that's not gonna be good, right, team? So now, as you're coming in, CoinFox is actually saying, please go ahead and consider hitting the like button, right? Please make sure to subscribe to the channel and doing that whole thing that finesses the algorithm, and that helps us bring in some more viewers, right? It always helps, you guys. All right, so thank you so much for coming on by. I can't appreciate you more. And we got a few things to look at, right? There are a few signals here that can give us a little bit of weakness and a little bit of strength, but we have to identify both of them. And what I mean by both of them is actually both by GTII and FNGR, right? They both gave us the targets that we were looking for, but what's next? What can we do about improving our accuracy for the following days? Well, I don't know if you noticed here, but the CPI read came in a little hotter than normal, right? So that wasn't to the expectations, okay? And the Fed, they kind of maintained themselves a little bit neutral, right? That's what the team was telling me. If the Fed is maintaining neutral, and we're getting a little bit of a hotter read on CPI, that honestly means that we can pull back in the broader markets a little bit, get ourselves down to a new support. I'm thinking that we can do this. As I was observing the charts right before I came on live, I was noticing that we could pull back just a little bit and then potentially gap up into the morning. So if we're going to do that, then the gap up in the morning may lead to the pullback, and then we got to see about a gap fade reversal or a gap or maybe a gap and go. We're going to have to just observe that in real time. But we're going to go over all of those things, and we're definitely going to combine GTII and FNGR here with the IWM ETF, right? That's going to be your Russell 2000 for the small caps. I don't know if you already saw that I released a new, I can show you here. I released a new per se a series, right? And that's called Microburst. So Microburst is going to focus on the micro cap and small cap movers for the day, daily. Okay, so today I covered MIRN and I believe another ticker, it was ADIL, right? So this was one of the tickers here. I'm already providing the analysis and targets for it, and this is the other ticker, MIRN, right? So I'm just going to get rid of the stats window. These movers here, right? So that's what I'm going to be focusing on. Hopefully, you know, there's no retail stuck on there or whatever, but that's the premise of the series, is really to provide some information in case there are some retail investors that are trapped within those tickers. We'll get them to maybe observe the potentials of the broader market movement and their particular ticker of choice. Okay, so just like that, I want to do this also for FNGR and GTII. So hence why I'm not actually releasing individual videos. It's because I think that it'd be better for us to observe FNGR and GTII, combine it with the broader markets in our daily plays, right? So if you guys didn't play based on what we were speaking on here, then you could have missed out, right? Another thing that I want to present to you, and take this as an idea, okay? Please take this as an idea. As we get closer to these upside targets, a lot of retail is reaching their break-even point. And a lot of the times as traders, we tend to reach that point, or say, for example, we got long a ticker and of course the thing goes the opposite way, right? The price action completely dips against you and you're thinking to yourself, oh, damn, again, it seems like the hedge funds or the smart money does this only to me. And it happens exactly when I go in and I'm immediately out of the money into the red. Tell me in the chat. Tell me in the chat, how many times does that happen to you? Because I can promise you, it freaking happens to me all the time, even as a trader that I am today. Like the moment that I enter, I'm in the red, and I'm like, oh man, okay, here we go. Now to observe the potentials, what are we gonna do, right? So, a lot of the times, some people who are able to manage their risk, they'll cut that loss immediately. Right? But some may think that, you know what, I'm going to add a little bit here and I'm going to scale in little by little until I reach my full exposure that I'm willing to invest in, right? Or trade. So whatever that strategy is that you're using, we have to kind of keep track of that. Because if you're observing that the strategy may not be profitable, then we can maybe hone in on that and kind of modify it. Find a better execution target. You know, where are we in the price action? Like, for example, here in relation to the broader view, like the weekly time frame. Where are we in that position? You know, how are we observing the price and how are we determining the entry to be there? Because a lot of the times we enter based on like a social sentiment, based on social sentiment, right? So this thing is ripping and ripping and ripping. And then we buy the top. And then when we're buying the top, there's a gamble there. There's going to be the gamble of whether we're going to be able to continue or not. So how is it that these traders, or even I, are able to catch the bottom before the move happens? Well, guys, that's kind of the focus behind what I do. And the reason why I speak to you the way I do and the way that I want you to observe the markets, right? There's another way. There's always a different way, right? It's I want to show you the way that I do it, my edge, and hopefully you can benefit from my edge and then use it on your application, on your edge. Because there's no way that I'm going to expect you to trade like I do. And there's no way that you're going to trade like me. And I'm not going to be able to trade like you either. Imagine that. But I can tell you this. From the master students that I've developed we're talking 120 students thus far. Of an enormous percentage of them already have such a critical edge to the point where they tell me that I may be incorrect. And the markets may move at a certain way or at a certain pace or whatever. And I got to tell you, I have to pay attention because a lot of these guys are truly on the ball. So what if I'm not sharp enough one day, and what if they are, right? So that's what I really want to do, right? So if you are interested in something like that, remember, get in touch with me. Get in touch with me at ArcMastersCourse@gmail.com. I'm gonna repeat the 18-week mentorship program as a as a quick draft. We're going to do a 4 or 5 week program of the intro to trading, and then we're going to move on to the 8 to 12 week mentorship for strategies. Okay, so get in touch with me at ArcMastersCourse@gmail.com and make sure to hit that like button as soon as possible. But I appreciate you, team. We gotta take a look at this FNGR ticker, you guys. We nailed the targets to the upside, but we printed a very ugly bar in the immediate short term. So if we're looking at the 4-hour time frame, let's go ahead and look at that, right? I think we actually did it in the daily. Sorry. Let's look at that daily. Yeah, the daily time frame. That's an ugly bar, right? So why is ARCa saying that? Why is this an ugly bar? Well, usually when you have this type of price, okay, first of all, we need to know how a candle behaves, okay? Let me just tell you real fast how the candle behaves so that you can understand why it even looks like this in the first place. So we're on the 1-day chart here, okay? So that means that it takes a whole day's of price action for this candle to finish its price action, right? Red bars, they usually open at the top, and green bars open at the bottom, okay? Now the wick, that little stick up there, that shadow or a wick or maybe a tail, that tail tells you the history of the price action during that period, right? So that's how you're able to tell what the price action did during this period. So this is 1 days of price action, and this is what it did during that time. It opened down here, right? That's the opening of the day, 250. It ran all the way up to about $2.94, and it pulled all the way back, and it closed here at 264. That's how you're able to tell what the candle did during that period, okay? Remember, it opens at the bottom and it closes at the top if it's green. If it's red, it opens at the top and it closes at the bottom. It's quite the inverse. And the tails, they just tell you the history of the price action. So if you see, for example, here that there is the opening, but there's a little bit of a tail under it, that means that this day went slightly red, right? It went slightly red for down to 228 from its open of about 231. And then it went up to a high of about 261 before it closed here at 247. So that's how you're able to tell the history of a candle, okay? This is called raw price action. This is the way we're able to see the way that markets move on a daily basis, okay? We're able to understand the candle structure. When you're talking about clusters of candles together, they then give you a story. They give you a potential, okay? Like, for example, this here. We don't see it all the time, but this formation here, it's kind of a broadening formation, right? When you're observing this broadening formation, or to be honest, it is a right-angled descending broadening wedge. This gives you already an outlook as to where price action can go. How do you do that? Well, if you know the trading rules, take a trend line, right? Right from the top side to the bottom side. Honestly speaking, it would be from the candle breakout. So let's use this candle here because that was right when it broke out. Let me move this to the right over here and I'll show you, okay? I'll show you just the way I do it so that you can observe how this is done, okay? So this is how it is, okay? We get that top side of the price action. This is a random formation that we're just looking at together just so we can determine how the price action is figured, okay? So the way you get the price objective, it's like that. From the top of the formation all the way to the bottom side because that's where it broke out of. Then we apply it to the bottom side here, and then it gives you your earlier targets. So it looks like this candle here met that target pretty nicely. And the downside here, notice how we started consolidating here, even if we reached that lower target, but then we made a new high. So that's how you get the hints, right? And to be honest here, I may have even drawn it incorrectly because these are actually your pivot points right down here. You got contact here, you got contact here and here. So what if I'm drawing it incorrectly? Right? Well, let's put it to the test. That was the breakout candle, right? And let's take this into consideration again. You can see how short I am from the target. So there you go. Just to get really down to the nitty gritty. So take a look at that. Overall, you were looking at this target telling you that, you know what? This formation is telling us that we're going to drop to 225. And that's the way I do it, team. That's one way. The strategies mentorship that I'm going to put together for you is to show you this, is to show you how we can combine strategies to identify future targets. This is only one way. Imagine the combination of strategies that we're able to put together. Now, if we put a line across this bottom side here, and see how price action behaved around there. Look at this. Resistance, 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 right? We have support, 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 support right here. Resistance, resistance. You can see how price action hovered around this line. That's because that was your inflection point from this formation. Knowing those little rules help identify where the price action can go. Now, when we're talking about the target that we bet here, because we spoke about this yesterday, we said FNGR could reach 385 to 396 today. And we reached the top side of $3.94. We pretty much did this to a 98% of accuracy. That's not bad, guys. That's not bad. And I'm going to remind you once again, it doesn't happen like this all the time. Yes, you've seen it happen for 3 days in a row for FNGR. And I know some of you are going to say, ARCa, you said this even before when you were covering FNGR, that it doesn't happen all the time, but it happened all the time. Guys, I'm just going to be humble with you. I'm going to show you utter humility here because I'm not going to I don't like the call out saying, right? I called it here and I called that target. That's not it. Because the information, the target that you're observing here was always there. That was always there. All we had to do was look. And all we had to do was be witty about how to look for that target. Okay? So I know that Kristen Shaughnessy, she posted a very nice thread saying that ARCa Bulls called the top. You know, she said ARCa Bulls said 366 and we hit 367. And, you know, you have Danielle Spears over there from Retail United saying that, you know what, ARCa Bulls nails it within pennies for now almost a year in trading with the ARCa Bulls team. Guys, that's not because of a crystal ball again. That's not because I'm a magician. It's not any of that. It's just because price action has tendencies. And guess what? Tendencies tend to be historical. And if we extend areas of inflection like this, then you'll see that we've often used them before. Like over here, right? This was our topside target today, what we reached today. And I haven't moved this since I last looked at it. Look at this. See how we use it over and over and over again? This is one of the ways that you can observe the markets. We can observe it by areas that are called pivots or that are called areas of inflection. Key supports, key resistances, lots of different sayings. Okay, you guys? So I just want to first show you that there are ways to observe price and give those targets before they happen. Now, how do we validate that they're happening though? How do you know the direction that the asset may be moving in? Well, that's the next thing that we can do with strategies. A lot of the times I tend to use, well, guys, don't be intimidated by things like this. Okay, this is just my personal code. Okay, this is my volatility index. It's a heat map. I've coded this in hard into TradingView to be able to tell me when volatility starts to expand. So the heat map in the background will tell me how cool we are, meaning how hard the disbursement of returns or the transaction rate, how light is it when it's really cold, right? And then how heavy is it when it's really hot? So this is called expansion. And then when we go down, that's called contraction. So expansion means a lot. It's a high frequency of returns, right? So people are trading a lot. Now, when we come back down, that means that there's a disinterest, right? People are pulling out or they're really not trading. It's not at a target that we would like to find as a fair value. Maybe it's too expensive. Maybe it's too cheap. We don't know. But that's why contraction happens. But we can identify when we break a certain zone, and this certain zone usually tells us, whoa, we're about to notice a quick change. We're about to notice a quick change in volatility, and that means that people are going to start either buying or selling. How do we know whether they're going to buy or sell? So now we covered the target, right? We covered the target based on psychology. We know where it's going to go because of this formation, right? Like we were looking at, right? This little formation here, it's usually a bearish formation. So the bottom side target could be here. But how about if the volatility is starting to expand? Because remember, volatility, the primary rule here is that volatility is direction neutral. Okay, so that only because we're expanding here and increasing the rate of returns, it doesn't mean that we're going down or up. It just means that we're increasing the rate of returns. And it's up to us as the traders to identify what direction that's going to be in. So that's when we use momentum. Momentum is a direction bias, and that tells you where we're going. Okay, so in this case here, look at this. We were expanding, right? We were at that cold front. And then we started expanding beyond this 15%, which I tend to consider a critical contraction zone. As soon as we break this, look at the volatility. Look at the stochastic momentum. It's pivoted towards the upside. And that's how I'm able to tell you, guys, we're headed upward. Now, but what target is it again? Remember, we used one strategy already to determine what target we can go to, right? Using this formation. In this particular situation, team, I didn't use a formation. I didn't use a psychological formation like this to identify that top side. The reason I'm explaining to you this first is because I want you to understand where I come from, and I want you to see that I'm actually practicing real world actionable trading sequences and strategies to identify top or bottom side targets, regardless of what the asset is and regardless of what anyone says. Okay? So if this is going down, those of you who know me. If this is going down, I'm telling you that it's going down. If it's going up, it's going up. I don't care who you are. I will tell you the way it is. Guys, I'm already noticing that we're above 40 likes. Please make sure to hit that like button. Subscribe to the channel immediately here, man. I really appreciate the attention right now, you guys. I really appreciate how many of you are participating here with me. You're joining here with me. You want to learn. I can see it. So let's go ahead and move on. We used one formation here to determine the downside. But how did ARCa get this target in particular? How did you know that we would go up to this target here? The simple answer is this: I don't. But then you're going to say, well, but how did you plot it? Even if you don't know, because it's a coin toss, right? Yes, it is. It is kind of a gamble, but it's up to us to determine what the odds are for that topside target. How likely are we to reach it, and how likely are we able to not reach it, right? So in this case, I used a geometric strategy. So this is where I used Fibonacci's. So if I used a Fibonacci sequence, I used a very small area from this range high to this range low, and I extended it. So just like this, look, this is how I extend the Fibonacci sequence, right? So using right here, remember, this range high to this range low down here, and that's how I extended it, okay? So this is the way I did it, and as soon as I do it, that's able to give you a series of targets that are gonna tell you a great bit of information, okay? So first of all, the first resistance that we got, we cleared it. That's the second one, right? This is the first target. So we got those already. But this target here is, I'm seeing this, the golden mean. If you ever do anything on YouTube, try this. Search the meaning of the 618 Fibonacci ratio. You're not going to believe what it tells you, because it's not for trading. And it's not for the arts. And it's not for construction. It's not for how the Romans built their empire. It's not for Stonehenge. It's not for any of that. It's way deeper. It's embedded into our code, into our human code. The galaxy, the spiral, right, is the same spiral that you're looking at on a snail. That's the 618 sequence. So that's the study of it. So if you're going to do that, search that. The meaning of the 618 Fibonacci ratio on YouTube, you're going to flip. And it just so happens that we use it in trading. We also use it in art forms. We also use it, guys, we use it everywhere. It's amazing. And it just so happens that without knowing, humans have a tendency of taking the price to those 618 targets. How about that? So now the probabilities of hitting 618 naturally, that's a huge thing. And that's what I did to identify this target yesterday. So why? It says right here $3.72. Well, yes, it does. But the 372 is not what I'm looking for necessarily. I'm looking for prior price action and its behavior near the 618. So if I'm going to pair anything, I'm going to pair prior price action and its behavior to the nearest a viable Fibonacci ratio. And that's how I was able to come up with the target. All I did was I looked left from where we presently were. And that's how that target came up. Okay. Next thing that we got to do is just identify how likely it is that we're going to go, right? So we look at, remember I was explaining to you yesterday the initial thrust. If you remember what I'm speaking of, you're going to know what I'm talking about here. The initial thrust is something that we look at from, say, a 15 or 30 minute time frame using momentum, right? So think of this, if you're in a still body of water, right? If you're in a body of water that's completely still and you have this wood pallet on your hands and you smash that water as hard as you could just to see how far the ripples of the water go, further and further and further. How hard was that initial push and how far will it continue to ripple? That's how time intervals react in the stock trading. What I mean by that is if you're sitting in the 15-minute time frame and you hit that initial thrust right here and this thing bursts to the upside, then it's going to cascade into the 30-minute time frame. The 30-minute time frame is going to catch that wave. If the wave is strong enough, it'll get to the 30-minute to the hourly time frame from the 30-minute, right? See how it's getting it now? And then if it's strong enough, then it'll get to the bi-hourly time frame. It hasn't gotten to the bi-hourly time frame just yet. Okay? So that shows you that time is constant here. It's showing you that the ripples are really how time cascades. So we ripple from the 15-minute into the 30 into the hour into the hour into the bi-hourly, and so on. So that's how we can tell how far the price action can move. This is the next strategy here, team. We have something that I have a data sheet that tells me how far an asset can move during a day's trading. Based on, let's just say the last 14 days of price action, I am able to tell with an indicator that I've developed here how much the asset can move. Right here is telling you ATR. That means average true range. So that means that any day, this asset, FNGR, can move 31.5 cents or 31.5 cents in any day's period. So the moment that it opens, this can go up 31 and down 31 inversely. So if we then pair that with the price action, so if we like this, look, if we noticed here that we closed the price action at 329 and we want to know what the upside target could be, well, we have around close to 32 cents in price, right? So if we open up, let's just say that we opened up at $3.30 the next day. So that means that another 31 or 32 cents can be applied to that. So that tells you that if we open at 330, then we're able to move this 32 cents up. So it was going to be $3.62. And then I look at your fibs and it looks like the 372 is very close to that average true range. But then I look left because the average true range is only telling me a number, but this is giving me behavior. Your prior price action is giving me the behavior. So I want to know where we're going to go. So that means that I'm going to naturally favor prior price action alongside the ATR and validate it with the fibs. You see what I mean? So I want you to understand the way that this is figured, because I'm not coming up with a target at random. The way that this is done is truly by behavior and mathematics. So that's the way we're able to push these targets and understand the behavior and understand where it could possibly go. It's not that I'm charting fraud. I'm charting a chart and I'm charting the behavior. So whatever that characteristic is, whatever the trait is, it's there. It's just, I can't change that. This is embedded. FNGR, it's its own character. This behaves the way it does, and it has consistencies, and it has, just like anyone else, right? Just like anyone else. You're going to have someone who's a criminal, and you're going to have someone who's a straight shooter. But they all have consistencies, and they all behave the way they behave. And if we study that person long enough, we're going to notice that there are consistencies and inconsistencies with their behavior. Guys, I just condensed probably 6 weeks or 7 weeks of mentorship from my master's students into 20 minutes with you. Okay? I want you to know the fastest way that I'm able to figure out these targets. And that's how I do it. So if you were watching here the entire time, I hope that you were able to kind of capture this, because it's not that I'm charting what the company's doing. I'm charting what we're doing. And more so, I'm charting what we're doing using volatility, which then presents what smart money, institutions, and retail participants are doing as a whole. So my behavior, or whatever I'm charting here as behavior, has a lot to do with their behavior too. So I'm charting them and us. So there's no escaping this. There's no escaping my way, because if they say, for example, they trade something in a dark pool, right? And then we notice that the next day volatility freaking spiked. Well, that's what happened. Because they traded it in a dark pool, this spiked. So it's naturally embedded into the behavior of the historical figures of this asset in whatever time frame that I noticed it in. So forever will it be there. And I'm able to see that. Whether they did it through a dark pool, whether they did it, I don't know. It doesn't matter to me. The fact is that I can see it. And whatever that it is, it doesn't matter to me. It just matters that it behaved a certain way and it reacted a certain way. And that's why the model that I teach is called the footprint model. Because if you're in a barren desert and the floor is completely mud, but there's no imperfections to the mud, what's going to happen if you're in the center of that and you step forward? Well, first of all, you leave behind a footprint to print a new one. So, and then what happens if you take the next step? You're leaving another to create another. And that's what this blank area is here. This entire zone from this moment here to forever moving forward is that blank desert. So whatever anyone does, I am able to see it. I am able to see whether you take a step backward or forward or sideways. And there's no escaping that. So guys, there's really no magic to this. It really is just strategy. So if you know the rules of the game, if you're a mechanic and you have your tool set, then you know that you're not going to pull out that huge socket that's used to pull out the freaking wheel of a tractor on your Toyota Tundra. You know, because the Toyota Tundra doesn't have that big, huge bolt that has that the tractors use to hold their big, huge tires. So why would you use that big wrench there? It's not necessary. So we use the tools that are available to us that are pertinent to a certain situation within a certain asset of a certain time frame. I know that sounds a lot. That sounds like a lot. But guys, we at the end of the day, we are just psychologists. We are mass psychologists, and we are observing our own behavior. This is what we're doing. We're feeling strong. We're feeling strong, but we're feeling weak. And that happens. That's called ebb and flow. Okay, that's normal. But when do they happen? That's where we come in, team. So that's where we find out. And that's why we're able to see this. Guys, I know that I've been, for example, people are saying, oh, ARCa's back, ARCa's back. Well, yeah, I am back. And why am I back? Because I'm presenting to you the opportunities to get the fuck out. Get out of the asset if you're at a loss. This is going to be great for you. This is an opportunity to get back what you guys. Some of you I know have averages at $5, $6. I know. Imagine what the price action was just 3 weeks ago compared to where we are now. You've gotten back that much. Okay, try your best to observe this. Use your discretion, because sometimes these things don't last. And these are the situations where you're able to really take it, grab the bull by the horns and say, you know what? It was a bad call. Let's just go ahead and call it here. And that's okay. And that's okay too, team. There's no fault in that. But you're able to recover some of that. And that's the important thing. The important thing as a trader is that you can survive for the next day. That's what we really want to see here, team. I don't mean to be aggressive with you. I don't mean to be an asshole whatsoever. I don't want to do that, but I want to show you the reality of things here. So as long as I can be of service to you, I will be. This upside trend is coming in. I immediately thought to myself, guys, I need to put the large caps aside a little bit, and I need to come to my original community, and I need to make sure that they know what the targets are so that they can have an edge to potentially risk off. Okay, you guys, my intentions here are really for you to try to find solace. Okay, find that. Just it's going to be up to you alone. Okay, no one else can make you do this, and it's going to be tough, and it's going to be hard, and it's going to be a rude awakening. Okay, but I'm not here to promise you $7. I'm not here to promise you $10 or $50 or $1,000. I can't do that. I don't know. I don't know where it's going. But what I can tell you is that based on behavior and historical price action, we may have a higher probability target for the upside or the downside based on the signals. Why don't we go ahead and start that now? Let's figure out what FNGR is going to do for the next day. Because if you're new to the chat right now, let's just say it like this: the targets that we spoke of yesterday, which were right here, 385 to 396, met pretty much at the penny. We got a 395 top, or what was it again? 394, and we were talking 385 to 396. We nailed it again. Good stuff. Okay, and also for GTII, we explained about these targets too, and we nailed those too, 2521 to 2550. Right? So we got the targets, but what's the forward look now? How are we gonna know where this is gonna go? Just the way that I explained to you over the last 20 minutes. Let's kind of apply that here, because the thing is that I don't need to perform that strategy to you over the span of 20 minutes to identify that. I really just need a few minutes, or maybe 3-4 minutes, and then we'll be on to the next ticker. Right? Right? It just takes a lot, because I need to show you what my personal eyes are looking at any given moment. I'm looking at all those things at one shot, right? So kind of like William, William, he said, I can only imagine ARCa, the way he walks down the street. He probably sees shapes everywhere, just like just like that one movie with Matt Damon. I forgot what it was. I got to tell you that when I observe a chart, hell yeah, I do. I really do. It really is the way it is. Not outside, though, just on charts. Okay, so let's observe what price action is going to do here for the next day. And guys, I apologize. I know that there's a lot of chat going on. There's a lot of chatter. I see a lot of friends, a lot of familiar faces coming on. What's up, Jay Cool? Good to see you here. Northwest, good to see you, my brother. Susan Michaels, good to see you there too. What is up, Seven? What's up, man? I apologize, you guys. I know there's a bunch of comments here. I'm not going to be able to read through everything. But Chad Youngkin, what's up, man? Good to see you there, too. My brother DJ and Coin. Dude, let me go ahead and... I don't know why I didn't do this earlier, but I'm going to go ahead and put you on managing moderator, brother. So you're helping me so much all the time, man. And it really does mean a lot. So I'm just going to go ahead and give that to you now. Okay, so guys, and he's right too. Team, remember that I'm trading the financial markets with the ARCa Bulls trading team on a daily basis. And I would like to invite you to join, right? Subscribe and come on by. And we'll be able to observe these strategies and these actionable situations live every day. Okay, so there's the link in the description or in the chat. And please come on by. So A says, thanks, ARCa. Appreciate these videos on FNGR and GTII. You're very welcome, my brother. So you know what? The reason I'm pulling them live instead of in those individual videos is because I know that you have my attention now, and I have yours. And I can explain to you how it is that I'm figuring it out, because there's other people who don't believe that I'm doing it like that. Team, I promise you that it's just strategy. It's just a game of chess, right? It's a strategy game, and that's it. All right, so let's dive into FNGR and observe the potentials for the coming days, okay? So let's go to the 4-hour charts. Now that we know that we have this little bearish formation, we talked about this at the beginning, right? So first of all, yeah, this is arguably this is a shooting star candle, right? It's showing us that price action, the bulls were taken over, went up to 394, and then the bulls got exhausted, okay? So the bulls ended up coming back down, and we closed below the opening of the candle, right? So now we're closing right down here at 319 from where the candle opened at 321. Okay, so that's telling us that, yeah, the bulls grew a little exhausted here, and a lot of people took profit there. The further up this goes, and the further the price action inches towards like a $5 target, the more sell-offs you're going to notice, because a lot of people are starting to think to themselves, I probably will not see this opportunity again, right? But yeah, I got to give it to you. We definitely have the warrants in line. There could be the those huge topside targets, but a lot of that could be hype. Okay, so make sure that you can practice discretion here and remove the risk when you feel that it's appropriate to you. Okay, so yeah, we got a bearish shooting star candle here showing that there could be a reversal here, but we got to observe the supports prior to this price action. Okay, let's go to the 4-hour time frame and see what that's looking like. Okay, so yeah, a couple inside bars there, right? So we gotta take a look at this. We also have inclining volume. Okay, so this volume as it goes up, right? Just let me come on. There we go. So as the volume goes up and price goes up, that usually indicates that there is a continuation to consider here. This would be a problem if we had an upside and we had declining volume. So that would mean that the upside is growing weak. But at this point, no. It's showing that there is still some strength in line, and it's showing that there is still continuation to observe. Okay, so even here, look at this on the 4-hour time frame. This was our prior targets. We were observing a 339 to 350 a few days ago. This 4-hour candle started printing down here at 319, and we ended up touching that resistance. So you can see that the resistance and support zones, they're still very, very much viable. We're still using them. Okay, so let's now see what we can do. Let's go to momentum and volatility. So this is showing us on a 4-hour time frame that we're declining, right? So it looks like there is some negative pressure, and it looks like we could come back down to some supports to observe, to observe maybe an area for picking up some bulls, right? Maybe there are some people there that are not ready, right? We can pick up some others that want to take this to the upside. Okay, so let's go ahead and take a look at this. Oh, sorry. Let's see. Oh, God, I'm sorry. I thought I just saw a message that I wasn't showing the chart in the ARCa Bulls members. No, I see it. Okay, we're good. We're good. You guys, YouTube, you can see my screen, right? Everybody's good. And Discord, please let me know that you can see the screen. The screen. Before we move forward, please just let me know that you could see the screen and we're doing good. We're good? Okay. All right, it's looking like, yeah, it's looking like we're okay. Just let me double check the things here. Okay, it's, yeah, I think we're looking okay. Perfect. So yeah, let's go ahead and continue now, team. All right, so 4-hour time frame, yeah, showing us that we have a little bit of decline here. There is a very impressive lead of the bulls right now. We're sitting at a 50% ADX. Your average directional index tells you how strong your trend is for the moment. And it looks like we're massively up in the 4-hour time frame. Let's see what that looks like in the daily. Oh man, check it out, team. Look at that. We're inching towards that 30%. And all those of you who are my master students know what 30% means on a daily. So that means that we're at a very strong trend. This is looking good. That's Danny, thank you so much. Yep, we're looking very good, and the bulls are still in the lead. Okay, that doesn't mean that we're going to move to the upside right away. It just means that we're doing good on a daily perspective. Okay, so let's go ahead and draw down here to the hourly time frame and see how that's looking. Okay, so coming back to the momentum here, remember that we spoke of the upside in the 15-minute, right? We have that thrust to the upside. 30-minute time frame on stochastics is also showing the thrust to the upside, and it's bleeding into the hourly time frame too. Right? We have that upside, all of which is at critical volatility, critical expansion. That means that there is a maximum amount of disbursement of returns. The transaction rate is ridiculous at this point. Okay, so that's awesome. That means that we're moving. Okay, bi-hourly time frame. Notice how it hasn't got that relief just yet, but it may be soon. Okay, so let's dive in really granular here. Let's go into the 5-minute time frame. That 5-minute time frame shows us that we can pull back just a little bit. Right, so if I want to focus in a little more, sure, let me just add an RSI to this. And please be aware that almost every tool that I use here is coded by me, except for the ADX or the DMI. This DMI is a directional movement index, and it has the average directional index within it. Okay, so this is it's TradingView's free script, right? Other than that, yeah, stochastic momentum, the RSI, and the volatility heat map, those are all coded by me. Okay, team, so let's go ahead and take a look now. 5-minute time frame does have a limited downside, and I say limited because of this. So this shows the downside. Stochastics, very delayed. I like that it gives us the overall perspective within the 5-minute period. But what's really sensitive to price is your RSI. Typical setup here. 14-day simple moving average, RSI signal, which represents price. Okay? So if we zoom in, you'll notice that the SMA 14 is just below the 50% mark. Now, what does that mean? If you remember correctly from yesterday, you'll remember that 2% up any of these junctions and 2% down any of these junctions present to us the area of gravitation. Okay, that means that in this gravitational zone, when we face support from both the SMA 14, the pink line, and the gravitation, there's likely a bounce, right? But if say for example, the SMA 14 were up here in this gravitation, well, that means that we're going to get pulled. We're going to succeed the underside of the SMA 14 and continue. And if we do continue, then that means that we would come down, experience a bounce from the gravitation, and then resist from the SMA 14 and continue. But that's not the case here. The case here is that we have an immediate short-term downside into the gravitational zone. So we have two areas of support. That's looking pretty good, right? So let's just go ahead and see what the strength is in the later time frames, because there could be a drawdown. There could be a further drawdown, okay? We still have some targets to observe down here, okay? I need you to know that these are still very much viable, okay? I'm looking at a 314 to about a 295 target, okay? But how likely is that to happen? Seeing that we still have a downside pivot in the 4-hour time frame being here, and if we move on to the 6-hour time frame here with the downside pivot, the 8-hour time frame downside pivot, that means that the original cascading effect is still in play. So that means that, yeah, we may experience here a further pullback, and then we'll be able to load at a later target. So there are a couple here, okay? There are a couple. Like I said, there's a 314, there's a 295, there's even a pivot right back here at 285. We can keep these in line, okay? And then we'll be able to gather some bulls and then rip to the upside again. Okay, but yeah, this was a really frothy jump over here, and it feels like we just got to take a quick little breather and continue. Okay, so that's what's up, Joe H? Good to see you, buddy. And just to be completely honest, right? Just to show you that this does have a potential pullback. Let's see the stats window one more time and see what it tells us. Okay, so yeah, we'll take a look at this. Your daily ATR low. Remember, we said 31 cents on average, right? It's showing you here that we can reach back down to 289. And we just talked about a target that was 314 to 295 and 285. That's coming down right in between, right? Looking good. So that means that we could pull back in the daily time frame back to 289 before experiencing a quick jump to the upside. So we're at 332 right now. 32 cents is what we can pull back. That puts us to $3, right? So if we're looking at price action, this is your area of resistance. So that means that we can pair it with other areas too, right? So we use the numbers versus the price action's history. So that's how we're able to determine that these could be your areas of support tomorrow. 314, 295, 285. Okay. From there, we can see a continuation to the upside, and then we'll be able to moderate how that happens by observing how the price action happens day to day. Remember, if you do become one of the ARCa Bulls members in the Discord, I guided this all day today. We observed FNGR from its opening all the way to whenever I left the trade, right? So we were able, guys, I mean, we were up here, we were all excited, like, damn, we reached the target, we got it, right? It was all emotional, it was cool, you know, and that and other plays too. Right, but I usually like to keep the traders kind of away from the trade when there's a Fed day, right? And the easier trade could be tomorrow, all right, because there could be an upside tomorrow in the broader markets. All right, so now if we do experience this downside here, that means that we got the 30 cents on average to the downside. Now what happens to the upside? Well, it depends on where we open. So if we open at around 332 or 330, that means that we can have 30 cents to the upside too. So that would put us at 367, maybe 368. So then we pair that with price action again. So if it's telling us 330 to $3.62, we observe where 362 is, just like this, And then we look at the price action to see what's near us. Well, this candle is near us right here. So that can tell us that we can observe a resistance range tomorrow between 367 and 376 after we get this pullback. So it depends on how long the pullback takes. If it takes all day, then we'll experience the upside the following day. So if we get the initial pullback right at the beginning of the day, then we may be able to bounce and experience this target top side by mid-session tomorrow or the end of the trade. And afterward, we'll be able to see these targets right up here, about 385 to 396. That's also a potential because we just touched them and we got the targets. We nailed them nicely. Okay, good. Now we know what FNGR can do. But what about GTII? Because GTII, that was another one. We nailed the target perfectly, right? Take a look at that. We were talking about 25.21 to 25.50, and we nailed it. We absolutely caught it. Now, the way that we got that was because of this candle here. This candle had a top side right there at 25.50. And we were noticing here that the breakout could take us to, you know what, actually, this would be a different breakout target. Oh, my goodness. Look at that. Well, that's part of the analysis, team. Right? We were able to take this line as the total width of the channel that we're trading, right? This channel. So we took that width and we applied it to the price action, and the line was telling us 25.47. So if we're going to pair that with a target, then we're going to look to the left. What's near 25.47? Well, that candle there at 25.50. Well, that's the damn target. And price action today reached 25.40. And that's how we're able to determine what those targets are, team. Just like we did on FNGR, the same way here, just using a different formation to identify the target. It's all consistent. It all happens within the trade. It's not the only way, right? And please observe that we definitely came back down, just like we were talking about, right? We definitely came back down to the area of support before we faced the bounce to the upside. So we got the full, what I called it yesterday, that we were going to get a full circle move. We're going to get a what's called a wall-to-wall move. So we got the downside first, and then we got the upside, and we met the targets just the way we were supposed to. Okay, now let's find out what the continuation bias is here. First of all, let's go ahead and look at candles only. Okay, so this is your candle structure here. All right, so already some people, I know they're going to be telling me, ARCa, that looks like a kind of like a bull flag, right? In fact, yeah, it does look like a bull flag. And what are some of the traits? So guys, what are the wicks looking like here? Master students, let me know if you're watching, and let me know what these wicks tell you. Let me know what they are, and let me know why they are like that and what they suggest. Please go ahead and type it into the chat right now. If I have my master students, go ahead and let me know right away what you're observing when you're getting tails like those. Okay, so we're getting long tails. To which side, and what side is price action suggesting for us to go? So it looks like right now, in the ARCa Bulls trading team, master students are already coming up saying more upside strength. Jen is saying up. Senor Pennington is saying upside. That is absolutely correct. If we're observing in strategy the direction that an asset can take, then we can look simply to the behavior of the wicks. So when you have long wicks to the downside, that means that you have bears struggling. The bears can't keep it down there. The bulls are taking it. So that means that the asset may experience a breakout to the upside in specific. Right? So Joseph, yeah, when we have long wicks to the upside, that's weakness. Long wicks to the downside, that's strength. Okay? So LPB is saying, how can we value an MC hammer candle on the hourly? Well, if the hammer candle has a long enough wick, and if it's printed at the bottom of a downtrend, then yeah, that's strength, right? In this case, yeah, we're downtrending here, and then we printed this hammer candle right at the bottom side. So we got that MC hammer here about to rip open a cool verse. We're gonna get some upside here, right? So that's right, Mark Roach. It is upside direction. So that's one strategy. Okay, that's one strategy that we're able to use to determine direction. Okay, one more thing that we can use. Now, what's happening during these three candles? Well, we can see that we're building an upside trend, right? Here, notice in the volume profile, right down here. right? Notice how volume, you know what, I can go ahead and display it a little easier for you because I know it may be dark for some of you on your mobile devices, okay? So I'll make it like this, just really apparent, right? Just like that. And take a look at this, right? We have volume inclining and we have price action inclining too. That usually means that strength is in the market towards the bulls, okay? One more signal. This is the moving average. This blue, let me block out this stuff. This blue line here is your volume's moving average. Whenever the bars, whether red or green, whenever they move above that moving average, that usually signals that particular trader. So if we get red bars above the moving average, that means that there's a lot of bear strength, okay? So when you're observing price and you're trying to get in on a trade, look at your volume profile, put up your moving average and see what's happening there, okay? Because when we get these green bars to move upside of the moving average, that triggers buyers. That triggers let's go upside. But when you get red bars like this above the moving average, well, look what happens, right? And then we get the downside. So we have to be observant over a few things, right? That's the second strategy, okay? So we have number one strategy. We notice here that maybe we have a bull flag, right? Cool. Second strategy, we have long tails to the downside, telling us that there is strength in the market. The bears can't keep it down. Third strategy, we're using volume here. We're using volume and we're identifying the break of this volume bar above the moving average. That's telling us bullish in three different forms, okay? Now the next thing, let's use indicators. Let's see what they're saying. Well, look at this, 12-hour time frame RSI just broke out from the SMA 14 and it's using it as a support and now it's bouncing. Now, one more for my master students here. Where is the signal line sitting and why is it important? The signal line is your cyan line, that baby blue line. Let me know, master students, in the chat right now before we continue, where is it? Where is your signal line? Where is it sitting within the RSI? And why is it important for us to identify that position? So let's go ahead and observe here. And Jen is already telling us that it's in the gravitational zone. That's right. Ian is saying the gravitational zone. That is absolutely right. So the master students are nailing it here. That's right. That means that it's going to be upside strength. So we're in the bottom side of this gravitational zone let me switch charts over here, right? We're in the gravitational zone in the bear weakness percentile, and this is likely to pull us since we're getting the support from the SMA 14. Good stuff. We're identifying now a fourth strategy. So now we're identifying a crossover strategy. We're using the RSI to cross over the moving average. So that's telling us that we're going to get the upside, right? So just to count them down again, bull flag, 1, right? We have the long tails to the downside. That means bear weakness. That's 2. We have the volume profile showing upside and breaking out of the moving average, 3. And we have the crossover strategy from the RSI on a 12-hour time frame, 4. So now we have 4 reasons for this asset to move on to the upside in technical terms. Okay? Now, I mean, in the candle structure here, we're getting super close to an area of resistance. So this 2552 top side here, that's critical. We need to get out. We need to get above that. Actually, it's 2550. 2550, as soon as we can start breaking that, there is an implied target on this. And how do we do that? Well, let's revert back to our strategy number 1. We're going to go ahead and take a look at the bull flag and get the upside target. And how do we do that? Well, this is the way we do it, okay? If we're looking at this bull flag here, you know what? I can just go ahead and start a new chart on the 12-hour time frame. And I'm just going to go ahead and draw it in as a new iteration here. So let's go to the 12-hour. Let's look at that little bull flag right there, right? So the way we observe or we get that price objective from a bull flag is like this. We take a trend line from the top side of the bull flag to the very bottom side of the bull flag, which is right at this candle here. Then guess what? That's right, you guessed correct. We just place it right up here. And that's telling us that we have a target of about 32.31 in line. That 32.31 is what is it? That's going to be 2, 3, 4, 5. We have about 5 cents to reach that. So now that we know that we have 5 cents away for this target using the first strategy, well, how can we identify, or how long can it take? Well, let's come back. Let's come back to the GTII chart here where we have the stats window. And let's take a look here. Well, we have 3 cents on average true range. So that can tell us that we can move, since we're about 5 cents away from our target, that means that we can move about 60% to the target based on an average true range alone. So if that's the case, if we open up tomorrow at 25.20, 25 plus 3, that's going to be 28 cents. So that would be 28.20. And let's just observe where that can land. Well, we have a resistance range here that we're observing. And if you look at right at the 50% of that return, where are we? That's 28 cents. Oftentimes, when I draw in ranges like this, your center or the 50% of that range usually gets used. So it's now confluent to my discretion. So I'm going to go ahead and make sure to plot that there. But I'm not going to plot it just to that 50%. I have to use price action. Remember, price is king. And that's why we observe it. So naturally, I see this candle down here, right? This wick, that low one there, is very confluent to this one here, right? Which is confluent to the closing of this candle here and several others prior. So that's where I want to go, right? That's naturally where I want to be. Somewhere around there could be that zone. So now we draw the range. So that means that we can take the low of that candle that we were observing to the 50%, because the 50% also has this and this, right? And this candle here, lots of things rhyming. So now we know that this could be an area for us to observe higher probability targets. That's how we do it, team. You know what I mean? That's exactly how I know. CoinFox, I used to do that all the time because there's like 3 GTIIs that are not global tech industries. Dude, I know all too well. I know that all too well. All right, so just heads up, okay, team? Yeah, we have a total range here of about 2609 to an adjusted target. We're going to get the new target. Remember, this is the, 3231 as the breakout target for the bull flag. So let's put that there, 3231. Just about right here. Right there. That's fine. Okay, so this is this is our total range here. And these are the very relevant areas where we can be. Okay, but from this entire range, this is the area that would be most of higher probability based on mathematics and literal behavior. Okay, so that's what I'm showing here. So remember, we're looking at first the pullback, and then we're looking at the continuation. So the pullback, once again, we could observe a few targets, right? Let's see. So it's telling us that the daily ATR low, based on the 3 cent retracement, that could lead us to about 20 cents, almost 21 cents. So if it's 20.63, you can average that to 21 cents. So if we're looking at our discretion here and our prior price action and all that good stuff, well, take a look at there. 2183 to 2271. So we're still in play. All right, you guys. So that's going to be your initial pullback here. Of course, we're going to have to get over this zone first in order for us to get up to the upper bound targets up here. That zone that we have to complete is going to be that 2550. Remember, that price is absolutely the one that we need to conquer in order for us to get to that top side. So guys, I can guide this. I can show you how to do this. If you are interested in the strategies mentorship program, reach out to me. ArcMastersCourse at Gmail. I'll pass you the disclaimer. I'll pass you all that good stuff. And it doesn't have to be for already knowing traders, because I'm going to consolidate. Remember, I'm telling you, I'm going to consolidate the 18-week program to a 4 to 5 week program to get it as a quick run through. We're just going to observe the basics of trading and then get into strategies mentorship. Okay. So remember, just reach out to me and I'll be able to pass you that pertinent information. Okay. So now we know the downside targets here for both GTI, the downside and upside targets for both GTII and FNGR. Please remember that I may be wrong as all hell, right? I'm not sure that this is actually going to happen, but I'm just giving you the higher probability moves based on the current signals of the chart. And that's all I can say. Okay, team? That's really what I'm here to just express to you, the dead honest opinion. But let's, what are the broader markets saying though? You know what? Let's kind of pair this with the IWM, with Russell 2000. So now we're going to start observing the broader markets. So is this going to support a continuation to the upside? Wow, look at this. The IWM completely declined here. What time did it decline? So at a certain point here, early in the AM, the IWM completely failed. And by the way, the target that we were observing yesterday was right up here. We came super close to it. I apologize. We didn't reach it all the way, right? We got to that 207.69. We were expecting a 207.75 to that within this range here. So we got very close to it, and I didn't even know that was going to happen, right? So that's an enormous drop. Why did that drop happen? Keep an eye on the time. Why did it happen? Right? It's 5:30 a.m. Can any of you tell me, Pacific time, can any of you tell me what happened at 5:30 Pacific time for it to get this sell-off? What happened in the markets? What do we look out for? Let me know in the chat. Let me know in both the chats what happens. Okay, good. I definitely have master students in here telling us that we have the CPI read, the CPI info, CPI right here. That's right. The consumer price index, the consumer index, right, that came in with a slight miss. So we actually ran a little hotter than normal. So that tells us that it didn't come into expectations, even if we were 1 bip above. So we got a hotter read. We spoke about this yesterday, that there could be a sell-off in the markets, which would affect FNGR, which would affect everything in the markets if we do have a bad read. And what did FNGR do? Right? You see how it all rhymes together, team? It all rhymes together. And that's why we pay attention to everything when we're trading live. We're going to be aware of everything happening in the macro perspective, in the local perspective, everything. Okay? Because this is the way that traders behave. We need to make sure to keep an eye on things, because when you're just like you are in a driving situation, right? If you're driving your car, you can't just drive without looking at your rear view mirrors. You can't just drive without looking at without at least knowing that you're to the speed limit. You know, you can't do that. You can't just drive and forget that there are other people on the road. You can't do that. No way. No way. So just like that, that's the way we do things in the ARCa Bulls trading team too. We also are looking at our rear view mirrors. We're using our signals. We're using caution when we're trading, because that's the smart way. Okay, team? Know that this is not a guess. Know that this is not something that we're putting as just, you know what, it should go there. You know, the should is not what we do, right? So, okay, that's what it's showing here. Okay, so now the IWM, is it going to recover? Is it going to show us a continuation to the upside? Well, to tell you the truth, there could be further downside on the IWM. I can identify this drop as a little overreactive, but that doesn't mean that we're not in a downward trend. So if it is in fact that we're in a downward trend and we're going to face another drop, we got to first combat this downside of 199.36 on the IWM. But I'll tell you this, if we do come back down to that area, that's going to be your triple bottom, right? So that can actually give the bulls some strength to take over. And if there is strength in the market, then that means that FNGR and GTII may also show strength to the upside too, based on that bounce. So that's another thing that we have to observe, okay? So let's go ahead and grab the probabilities here of a drop. The 5-minute time frame is showing a little bit of weakness on that stochastic momentum indicator. Right here. Right, a little bit of weakness there. And that's fine. That's fine. If we get the cascading effect, it's showing me that the 1-minute time frame, 2, 3, 4, all of those are pivoted towards the downside more than likely. Okay? And here's one more thing that I didn't actually think of looking at. I do have, and this is something that I've offered to retail. No, I've never really offered it to retail. This is I guess I could, right? This is an indicator that I've developed that gives you buy and sell signals. So this printed a buy it printed a buy signal up here on the IWM. Nice. Let's see the 15-minute. Yeah, 15-minute time frame, same situation. It was a cascading effect. Yeah, this thing barely got you any type of upside here. and it's suggesting a sell now. Okay, yeah, that's our signal there. We're talking about a sell, right? We're talking about downside pressure here, so we're getting a sell side already. I do think that we're going to get a continuation to the downside. The other thing is this, right? Look at the background colors, right? You see how it's very bright green, and then it starts diminishing or diluting that color till it becomes very much zero, and then you get introduced to the shades of red. And as you continue to the downside, the red gets more and more intense. That volatility is based on a whole cloud, HULL. Okay, so HULL meaning 32 bands is what I coded, right? I coded 32 bands of whole moving averages from the short period all the way to the 32 period, and I had them kind of I blocked out the visibility, so I made them transparent, and I left the 1 period and the 32 period visible, and I created a color spectrum in between. So that color spectrum is telling you the strength of the downside or the strength to the upside. And you can see here how price action is starting to diminish and diminish. You'll see the green diminishing too. So if you don't get a sell signal up here, these will tell you that there's weakness. So it's a backup system is what I'm trying to tell you. Okay, so yeah, this is a buy and sell indicator. I wouldn't use this only for the strategy of buying and selling. I would use this in combination with your strategies to tell you how if your strategy is viable or not. It'll be an extra confirmation tool. Okay, so guys, I guess this will be the first time officially, right? But I guess if you are interested in that, I wasn't really thinking about selling it just yet, but arcabulls@gmail.com. Let me know if you want that buy sell. Okay, so anyway, team, let's go ahead and continue on the analysis here and find out if we do have weakness. If we're gonna continue to the downside on the IWM, which will then in turn affect FNGR and GTII, what would happen if the S&P 500 shows weakness? Well, to tell you the truth, I'm not sure that it's showing weakness. I think that maybe the weakness was already done. Now, let's observe this, just like we did on the other chart, right? Let's go to the hourly time frame, or you know what, even the 30-minute time frame. What is this? We have a huge sell-off there, right? And what time did that sell-off happen? Look at the bottom, right down here, 5:30 a.m. So you can see that everything kind of rhymes together, right? This wasn't a predatory short. This was actually just because the CPI was bad, right? So that's that's telling us that we just we didn't like the read. We didn't like what they said. So we didn't like where we presently are. So that's how everything rhymed. Okay, now let's read the probabilities here, because look at this. 30-minute time frame on the SPY. We're in the gravitational zone here, and we're observing a potential crossover. That means that we may get an upside here in the immediate short term. And what negates that is this. I have a feeling that we're going to set up a little bit of a bear trap here. And why would that be the case? Well, because we've already done it a couple times before. I literally mean that. A few times before. Let's look at the history, okay? Let me draw it in. Look at this here. Huge drop, and then recovery, and then we make a slightly higher low from this lower low, right? We get this little higher low here, and then we rip. Take a look at this. Huge decline all the way down here. Then we get the recovery, and then we make a slightly higher low, and then we move up. Right? And you know what? This was the direct opposition. It's actually, you know what? This was a double bottom here. So we got a huge downside here. Then we got this drop right into here, and then we moved up. So we have done this before a few times, and it appears as though it's something that's set into behavior. Okay, so if this can be two different setups. Okay, this is either a dead cat bounce or a bear flag, or a bear pennant in this case. Now, bear pennant would be drawn in this fashion here. Okay, so it would be kind of part of the triangle family, just like this, right? And just like that. Now, the reason why I'm telling you that there could be a bear trap here is because usually when you're facing a bear pennant and you're observing the apex of the triangle being the very peak, right? As you get closer to this, you get closer to invalidating that. So in this case, you have about 85%, 90% to the apex. That is already telling me that this potentially is invalidated. Okay? So if this has an invalidation on the bear play, that means that we can use its natural targets to identify the downside as the upside targets. And something tells me that these targets right up here may be the ones that we can face. Let's figure it out. Every triangle gives you 3 targets. The first target would be at the breakout. Let's just say that we would break out from the 30-minute time frame. This is target number 1, 514.98. Target number 2 would be the center of the triangle, right? Like this. This is part of strategies, guys. I'm spitting to you more and more strategies everywhere. So it doesn't matter what ticker we're looking, you can use this anywhere on crypto, bonds, currencies, equities, all across, futures, forex, all across the board. All right. So this is your second target, 516.63. But now if we take a look at the higher bound target, what would that tell us? That would be this target here. We apply it to the breakout position and take a look at this. We're already observing this top side, 517.37 to 518.40, and your top side here is 518.62. That tells me that this has high validity. Okay, so now what about geometrically, right? What about fibs? Let's take let's take the whole day's range, right? The high of day to the high of the intraday, right, to the low of the pre-market. And it's very, actually, you know what? Let's just do it to the low of day so we can keep consistency here. So just like this, right? So take a look at this, man. We're right in the middle or just very close to the one spot 618 yet again. And look at this. We're right at the one spot 272. You guys know, the ones that watch me here all the time, you know, the 272 and the 618 targets, that's magic. And our range of discretion and our range of psychology is well within the geometric spectrum. So now what about this? What about the ATR? We have $4.95, just about $5 in average true range. Look at the daily ATR top. Oh man, guys, come on. 518.43. So literally, the algorithm, now mathematics is telling you that it can meet a geometric form of mathematics and a psychological target as well. And with our personal discretion using price action. So that's how it all rhymes together, team. So we can see here that we could be seeing an upside, okay? And that doesn't mean that it can't perform to the downside, okay? Because I'm just giving you the higher probabilities here. If this is showing weakness because it's already approaching the apex of the triangle, which means invalidation, that can only mean that we could express an upside here. So if we get this upside, that means that the IWM also is going to see a potential upside. And that means that FNGR and GTII in turn will also get the upside. You guys, it's looking good. It's looking okay. Now, let me take a look at the immediate short term here. See if we have some 5 minute time frame downside. I actually, it doesn't look like we do, right? It looks like it's already bouncing to the upside from the 5 minute time frame. It's already crossed over to. Let's look at the 10-minute time frame. 10-minute time frame getting a little bit of resistance here. So that tells me that we will be on the 10-minute time frame. Yeah, we could experience a downside here to about 512.89, maybe into the bottom side of about 512. I would say, yeah, right about here, 512.29. That would be honestly the one of the lower bound targets, and then we would experience a continuation to the upside, right? So if we are going to get that. And there it is, right? That's your 30-minute time frame. It's in the gravitational zone. So that would be early in the session that we would get a pullback and then that continuation. Same situation here. This the SMA 14 is entering the gravitational zone and we're within the gravitational zone. The RSI could shift here with the upside pressure that you're getting from the immediate short-term time frame from the 5, 10, and 15. So that's kind of how I'm observing the higher probability moves from the price action here. Okay, team. So now, yeah, I think we're straight. I think we got a immediate short-term time frame downside. If that's the case, then I think by let's see, by about Euro Open, we'll get the recovery or start the recovery back up, and then the question would be whether we're going to break out before pre-market or after. So there may be a gap up here, right? We may experience a downside here and then a recovery into pre-market equity, into our, traditional equities. And then that's going to tell us, okay, what are we about to do? Well, I have a critical thing to tell you about that. Okay? Because if we do take that downside, right, like we're observing here, because the immediate short-term time frame is telling us that we'll get that downside, we'll recover by pre-market, and we're talking about potentially breaking out into the pre-market. Where does that put us in price action against the fibs? What does that show you? That's your golden pocket. That would be between the 0.618 and the 0.382. That's right, Ian. That means that we could see a jump to around 513.88 to about 514.44. Then we'll pull back to either the 0.5 or the 0.382 and bounce from that critical bullish zone of the golden pocket and eventually meet our topside targets. All right, so that's what I'm observing here for the immediate short term on the SPY. Okay, the S&P 500 is looking not bad. I think we're set to make some pretty interesting moves here. All right, you guys. So let me take a look at what we can do here. Okay, yeah. So guys, remember another way that a lot of people love in the ARCa Bulls trading team is how we trade the SPY, because it is $500, right? But when we trade the SPY, there are at the money or slightly out of the money options contracts that are literally worth anywhere between $40 and $50, $60. So we can trade a long call option for $45, $50, $60 that's slightly out of the money, and then bet that on one of these supports, that we'll get a bounce to the upside. And that when you're trading options contracts, man, and you identify the right bottom with the right top, you're talking about turning $40 or $55. You'll flip $60, $70 out of it. So then you can only imagine what it's like when you pair that with several options contracts at once, right? So that's another thing that we can do, right? It's not only options trading, we also trade live shares as well. All right, so please make sure, join the ARCa Bulls trading team. Come on by. We'll be able to express some pretty cool stuff. Guys, I'm not trading there alone. You guys see here, CoinFox, guys, Mark Roach, a lot of my analysts are in here. Off-Grid Gorilla, Sebastian, all of these guys are powerhouse traders. Okay, so I would never share the floor with anyone if I didn't deem them worthy. And in fact, at this point, I feel like CoinFox deems me worthy. I learned a great deal from the man. All right, I got to be honest, okay, team? So I'm really sharing the stage here with an amazing set of traders, and traders that not only believe in the trading, but they also believe in me and in the team. So we're growing it. We're making it something. Come on by. Say what's up. All right, team. So that's going to be your, I'll go ahead and paste that link one more time here into the chat. That's it right there, you guys. But yeah, so that's the SPY we're looking. Guys, who's trading? Somebody was trading. I guess if you guys didn't know, I'm just going to elaborate real quick, right? I created a new series of tickers that I'm going to be observing daily, and it's called Microburst. So I'm going to be looking at the 2 or 3, maybe 5 microcap to small cap runners of the day, and I'm going to cover them, right? I want to see if there is some retail trapped in them, and if they need assistance, then I'll kind of be that aid, and I'll just put out my thoughts on it, and hopefully they can get an edge over what I'm seeing in the markets, okay? So just know that I mean well by this. So today we looked at MRIN, right? I'm expecting here a pullback into this zone of about 46 to 43.76 before a potential continuation to the upside. There are some critical immediate short-term time frame supports right up here at 56.83 to around 58.49 and 60 cents. But if the bears really take over, then we can see that lower bound target. Okay, so if it's not these two, then it's going to be this one here before we can experience a bounce. Okay, now another ticker that I observed here was ticker symbol ADIL. ADIL, similar situation. I'm expecting this to get, let me see what it did on the 12-hour where it closed. So it looks like it closed on at $2.39. Little bit of a shooting star there too, right? So if $2.39 is the close, yeah, I think we could get a pullback down to about 212 to 227 right at this candle low, and then experience a bounce so that we can immediately see a potential top side of 274 to 307 with a focus of $2.90. So if you don't want to watch the video, I'll go ahead and just I'll just go ahead and, express to you here my thoughts directly. But yeah, the video that I released is called Microburst. All right, so those are going to be the daily movers, the daily top movers in the micro cap realm and the small cap realm. So give it some love, team. And guys, we surpassed the 50 likes like we were talking about yesterday, guys. It looks like we're above 80 likes already, team. Thank you so much. I can't express to you enough gratitude here. I definitely love it. So if you haven't done so already, please do me a favor and subscribe to the channel. Hit that like button and do everything necessary to get this channel moving and thriving. All right. So anyway, yeah, let's take a look at now. I don't know if we had any people trading Tesla, right? But Tesla did have an interesting day today. Okay, so let's go ahead and see this, because I got to be honest. It did have that 5 a.m. sell-off too. It did. But what I noticed is that the markets continued at a certain way. They pumped at a certain way, and Tesla really didn't give one hell over what that did. So Tesla, just like always, right? I got to tell you that it's under a lot of scrutiny right now, Elon Musk in particular, right? There's a lot of rumor out there. There's a lot of crap going on. So Tesla could be experiencing some weird ebb and flow. Okay, so if you're trading Tesla, please make sure to be very careful with this. Okay, because Tesla can really rip your face apart, as you can see here. Right, this thing will give out everything that is gained and then gain everything that it's lost, and inversely speaking, right? Imagine, look, guys, I'm telling you the freaking truth. This was our bottom side here. Look at this. Let me get a circle here. This was our bottom side here. We're going to enter right there. And we were identifying this as the higher probability top side, right? But look at what price action did to get to that target. Look at this. So, and I often do this to the team, right? I'm like, guys, if you don't know how Tesla trades, then if you want to get from this point to this point, you're going to have to do like this in the price action and lose your life and your wife and your mortgage. And then you got it. And, you're all good. But that, you can't trade like that. Okay. So just make sure that you practice with utter discretion here with the Tesla asset, because this thing could really hand you, this thing will rip a new butthole. All right. So, Sensei hit, that's going to be, NITO. Yeah, I got you. So, Mark Roach, what's up, buddy? Sorry, you guys. I know that I'm not, observing the chat as much as I should be, but I would really like to share with you those thoughts. Okay. So yeah, let's go ahead and take a look at NITO for, my analyst here. And that's going to be Mark Roach. My buddy, thank you so much for sharing this. And like always, guys, the first step, let's look at the daily time frame. Let's see what it did. Let's see how it behaved, right? So very, very awesome day. It ended with a close of 19.31%. And at one point from the opening of the day, this thing had ripped about 34.94% overall. And that's particularly important because it is a break of market structure. And I also see a formation here. So just like we did when I explained to you earlier in the session what FNGR did, let's go ahead and kind of combine that strategy into what this is doing too. So let me see if I can get a little more granular here and really use some of these candles here to my benefit. So I think it would be something like this right over here. Okay, so there's two potentials I'm going to show you. Okay, let's start drawing it in. This would be your top bound here. So this is a formation that can be driven both up and down. Okay, and this is going to be your support bottom. Let me see if I can get some more consistency by using this wick. Oh yeah. Contact point here. We'll adjust this a little bit there to get that contact point there. Nice. Okay, yeah. So this is a right-angled broadening descending wedge, or descending broadening wedge. Okay, I realize that we have a little 12-hour shooting star there, so that's not the best look in the world. But there are certain rules that we need to follow here. Okay, so let's start counting them up. 2, 3, 4. Oh my goodness, guys, this ticker may be in an invalidation of a bull play. Okay, it's not completely confirmed whether it's going to do it, and I say this because there is there is this, right? We have a huge upside pivot with 12-hour momentum still suggesting a continuation to the upside with critical volatility inclining. But psychologically, this is invalidating. Okay, so what do I mean by that? Whenever this practices the golden rule of three. So usually we get 3 tests of the resistance, and then your true breakout tests would be 4 and 5. But if we look close enough here, we can see that we have test number 1, 2, not this one here, 3, 4, and 5. So we've already done the 5 tests. So that means that we may be setting a bull trap here. Okay, so if that is the case, then we then have to move to a shorter time frame and see what's up. It is moving with a catalyst though. So it looks like, let's see, is that, yeah, it's saying here that this is Safe Foods granted patent approval in South Africa for its proprietary technology. So it does have a nice catalyst. Okay, so let's go ahead and now take a look at the probabilities for continuation. What is the 4-hour time frame telling us within momentum? Well, this is one of the minimum time frames that I can observe to tell you that continuation to the upside is very likely if the 4 hour shows it. Then we have massive expansion and we have a huge upside pivot within the stochastic momentum. And not only that, is that stochastic momentum is inside of the bullish control zone with a massive upside pivot. Okay, so this is already telling me that this is going up for a few days. All right, so let's get granular. Let's go to the hourly time frame. The hourly time frame is coming down to a potential support. This is a dangerous area. This is a very dangerous area. Why do I say that? Because that SMA 14, let me expand this big, okay? Just like this. The SMA 14 is, that's so lucky. That is so lucky. I was going to tell you that this thing is actually right in the middle, but the fact that it's in the underside, that means that it's at gravitation from the prior zone. That means support from the SMA 14 and the gravitational zone support. So there could be a bounce here. Okay, and that would be immediately almost. So how far can this go down? Let's pull up the stats. So looks like we could dip down here to about 102. That's a little too far away. I doubt that's going to be the case, but it's there in the mathematics, so we can't negate that, right? So let's pull up the moving averages. Okay, and I'll grab also the immediate short-term moving averages so that I can see how they are acting with the price action as we're moving now. There we go. So that's, yeah, I'm potentially looking at a drop to around, let me see here. There we go. To the EMA 9 or the SMA 10. SMA 10 is the neon green line, and the EMA 9 is this teal blue. Okay, so roughly around here is what I'm observing as a support bottom, but we don't use the moving average. We use the candles that are close to the moving average. Okay, so you can see that this SMA 10 is close to the wick low here, which then takes you to another range. We have this bottom side of the wick, this bottom side of the wick, and this body with a 50% retrace. Okay, so that would be your zone, just like this. Take a look at it. You have the 50% here, the candles at the 50%, wick and wick bottom. Okay, so that's what I'm observing here for a potential drawdown. Okay, get the bottom side here, and this may be able to experience a bounce. Let's move on from the, 15-minute time frame. 15-minute time frame is telling you that this could drop down to 143. We're looking at 141, right? Remember, we're using the stats and the moving averages, but we're using them in conjunction with the raw price action. Okay, so yeah, looks like we could drop down to this level here, get a little bounce to the upside, and then continue. So now let's look at 30-minute. Actually, I was going to do this with momentum. 15-minute time frame downside on the RSI. Good stuff. Let me get rid of the moving averages. And the stats window 2. I can get rid of that for now. We're going to observe the momentum indicators. Yeah, we're contracting here. We have a downside pivot and a downside pivot here. Very likely for this to come down to these targets here. Let's see the 30-minute. Still downside, contracting, and downside. Good deal. And this is where your hourly is at support. If you fail the hourly as support, then that would get things a little more real, okay? Because your buy hourly that would be your next bounce. So we're looking at 2 hours of downside if the hourly fails. So then I gotta say that using the stats window, if we experience a bi-hourly sell-off, then your 102 is gonna be of higher probability. Okay, so let's match that here with price action. What can stop price from continuing on to that 102 target? Well, freaking lots of things, right? The 102 is just so freaking exaggerating here. I don't even know that I can even use it as deem it viable, right? But this is the one area that would stop it. And there are plenty of other areas that would stop the price action from continuing down there in the first place too. 104 to 108. There is a bi-hourly gap right in here. And that's pretty much all I'm going to say. That this, I don't think that this is going to get. I don't think that this is going to get further downside than. This is the lesser probability target, to be honest. If we're gonna fail the hourly range, your bi-hourly range would be here, and then we would take it to the daily range if we do fail those two. Okay, so that's really what I'm observing here, and I don't think that we could experience further downside than that. I really do see that there. I guess if we fail the bi-hourly, then yeah, we could experience a bottom regression touch. So then we could get a bounce to the upside again. Okay, but like I said, the later time frames, right? The 4 hour huge upside pivot, right? 6 hour massive upside. The pullback is going to be temporary, and the upside could be big on this, like really big. So if that's the case, then let's just say that we were to break out from this formation on, let's say, it's getting close to it. So let's just say that we were to break out on, say, Monday of, you know what? Hold on, guys. Let me turn off this. I know my wife is just coming in, so I got to make sure to turn off the air. She's going to freeze herself outside. I usually run hot, you know, so I gotta make sure to have wind blowing on me. So let me just get this thing turned off here and continue. Do it. All right, here we go. So, yeah, what I was telling you, team, is that the upside can be massive. So let's say we break out here on Monday at around 7 a.m. Pacific time. Take a trend line from that area there. I already kind of had it, right? Let's do it one more time. From this point here, right? And then let's take a trend line, because we're observing this as the higher probability breakout point. So then we apply that to that point too. So we were talking about a 7 a.m. break, right? This is your this is your potential target on this 291. All right, so take it with a grain of salt, okay? Because we do have other targets to kind of get rid of. Naturally speaking, we have this range over here. Sometimes these targets are so silly to me, right? But yeah, we have to combat the 174 to 191 in order for us to get to the top side. ARCa saying I'm scared of the wife. My bro. I just don't want her to get sick, and then my son's gonna come downstairs and it's cold as hell. You know, it's just a studio that's really, really, really hot, right? Because of all the gear and all the screens and stuff. But yeah, so yeah, these would be the upper bound targets. Okay, we need to get over things like this in order for us to continue. Let's go to the 12 hour and see what that's looking like. So that's telling us that we're sitting at about 145. It looks like we have a resistance at about 159. And yeah, I definitely see that as viable. 159, yeah, that would be the resistance here of about 156. Yeah, pull back into these zones here. Remember, your hourly failure would lead into the hourly being 136 to 141. Your hourly failure would lead into the 131 to 124 before a bounce, and then a continuation to the upside. If we fail the bi-hourly range, then your daily range is going to be the next one, okay? You got to be very vigilant about how this is being played, okay? But the upside target on this is freaking ridiculous. Based on a psychological perspective, this can really rip, like big time rip. All right, so yeah, I think that is it for ticker symbol NITO. Okay, team. So you know what, team? I'm gonna go ahead and just shout it out one more time. If you are interested in that ARCa Bulls mentorship program, reach out to me at ArcMastersCourse@gmail.com. Right, I'm gonna fast forward 2 programs here. All right, there's going to be the one that's a 4 to 5 weeks of the introduction to trading, and then I'm gonna push you into the strategies mentorship. Okay, so get in touch with me at this email, and we'll make that happen. If you would like to trade by my side, please remember to hit the link in the chat. I just pasted it there for the ARCa Bulls trading team. All right, you guys. So I'm gonna go ahead and close shop here, team. And I think we're pretty much ready for the next day of trading. And I'm gonna go ahead and make sure that we get ourselves ready by 6 a.m. Pacific time tomorrow. We'll get the market prep going, and then we'll rip it. All right, you guys. But I appreciate everybody for coming on out. If you have any questions or concerns, you already know where to reach me. All right. But I love you all. Let's go ahead and sign this thing out. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night and morning, and I'll catch you at the bell mañana. Adios. Yeah.